All right, today we're digging into the story of Rezolve AI. This is a stock that just had a huge day, even while the rest of the market was falling. Now, a recent analysis suggests there are three key forces pulling this thing in completely different directions. You've got a game-changing news catalyst, a deep value argument, and an incredible amount of market pressure from traders betting against it. So let's unpack what's really going on here. So here's the number that got everyone talking. On a day when the broader market actually slipped, Rezolve AI just completely defied the trend. It closed up 8.5% at $3.29 a share. At one point, it even touched $3.48. You know, in a market like this, a move like that really makes you stop and ask, what's happening? But look, a single day's performance, that's just a symptom, right? The real question is, what's driving it? What are the fundamental forces that led to this jump? And more importantly, what could they signal for the future? That's what we're here to figure out. So here's how we're going to break it down. First, we'll look at the immediate catalyst that sparked this whole surge. Then, we're going to explore the long-term value argument that's being made for the company. After that, we'll dig into the really intense market pressure from short sellers. And finally, we'll pinpoint the key dates that could decide what happens next. Okay, first up, the breaking news. You know, every big stock move needs a trigger. And for Rezolve AI, that trigger came from a major announcement in the retail industry. So the company announced it's going to have a massive, high-profile presence at NRF 2026, which is better known as Retail's Big Show. And look, this isn't just some random conference. This is the place where huge deals get done and the future of retail is basically decided. For a company like Rezolve, being front and center here, that's a huge statement. And what are they going to be showing off? Well, it's their core technology, something they call Agentic Commerce. The idea is actually pretty simple, but really powerful. Imagine AI agents that can act on their own to find products, build a shopping cart for you, and even check out, all just based on what you want. This is the future they are selling. And they are going all in. Seriously, they aren't just showing up, they're a headline sponsor. They're doing a live session with a strategic partner, Microsoft, which, adds a ton of credibility. They'll be giving these immersive demos to executives from pretty much every major retail company you can think of, showing them exactly what this AI can do. This is their moment to prove their tech in front of potential billion-dollar clients. And this quote from the company's leadership really says it all. They see this event as a pivotal moment, not just for them, but for the entire industry. They are betting big that agentic commerce is going to be the next massive wave in retail. Okay, so that's the catalyst. That's the immediate news. Now, let's talk about the second pillar of this story. Because beyond the breaking news, there's an argument that Rezolve AI has this much deeper value, one that the market is just completely overlooking. The core argument here is that Rezolve AI is a classic diamond in the rough. I mean, you've got an innovative AI company targeting a huge market, but for some reason it's trading way below what its fundamental business might actually be worth. And the big question is, why? And here's where that value argument gets really concrete. The stock is sitting around $3. But Wall Street analysts who use discounted cash flow models, projecting future earnings, they see a fair value between $7 and $15 a share. That is a massive, massive disconnect between where it's trading today and its perceived potential. So we have a positive news catalyst and this really compelling value argument. But there's a third incredibly powerful force at play, an enormous and growing bet against the company from short sellers. This is where the story gets really tense. Now, before we look at the numbers, let's just quickly define our terms. Short interest is basically the number of shares that have been borrowed and sold by traders who are betting the stock's price is going to go down. When this number gets super high, it can create the perfect storm for a short squeeze, where any good news forces those traders to buy back shares, which can drive the price up fast. Just look at how this is unfolded. Go back 6 months, and the short interest was a tiny 2.3%. Then it just started climbing and climbing. It hit 17% in December. And today, data from Ortex estimates it's over 25%. That is a dramatic, aggressive pylon of bets against this stock in a very short amount of time. And the pressure is just intense. On one recent trading day, out of about 11 million shares traded, nearly 6 million of those were short sales. That means over half of all the trading activity was from people betting the stock would fall. Even as the price was going up, the bears were just doubling down.
So, here's the crucial point. The analysis suggests that once short interest crosses a certain threshold, and that's often seen as around 30%, a stock becomes extremely vulnerable to a squeeze. With estimates already hitting 25% and climbing, Resolve is getting right into that territory. It's like coiling a spring tighter and tighter.
Which brings us to our final section. You've got these three massive forces, the catalyst, the value, and the pressure, all colliding. So what are the key events that could decide which one wins out? Well, there are three huge dates right around the corner. First, an official report on short interest is due any day now, and that'll confirm just how high that number has really gone. Then, on January 11th and 12th, the company has its big moment at the NRF conference. And finally, on January 13th, management is holding an investor call to give updated revenue guidance. Each one of these is a major test for the stock. So that's the battleground. On one side, you have a major tech showcase and a valuation that suggests the stock is deeply undervalued. On the other side, you have this massive wall of traders betting that it's going to fail. The question isn't just which force will win, it's whether this combination is about to create a truly explosive move. And I guess we'll find out over the next few weeks. Thanks for joining this explainer.